The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 27th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that just simply empower human potential, because living up to our potential, well, that is something that we must master each and every day. So let's begin with an empowering belief or two. How about we start off with this? And this is a true statement. Life, folks. Life is like the movie you see through your own unique eyes. Some of us watch movies in 3D, some black and white, some in living color. George Bernard Shaw, he once wrote that the people who get on in this world are the ones who get up and look for circumstances they want. And if they can't find them, guess what? They go out and they make them. Now, to me, that is a beautiful way to live. What an empowering way to live. You know, make your own circumstances, because our thoughts, folks, they are like boomerangs, and they come back to us. And our attitudes, well, they just simply are the paintbrushes of our mind. So the question that I have for you today, because questions control your focus, I'm going to give you two questions. The first question is, what picture are you painting for yourself today? Have you painted a picture? What does your day look like? You know, you get up in the morning, you can start with a fresh, clean palette out there, and you can paint that picture. What a beautiful thing. So that's the first question. The second question, just in case you're struggling with anything in life out here, and this is always a great question to be able to ask, and that's this. If you knew that everything was going to turn out okay, if you knew it, that everything was going to turn out okay, how is it that you would act right now? What is it that you would be differently right now? Because that, folks, truly is the way to live. Let's go check out these markets here. In fact, during the break in between shows, I got a phone call from all the way down in downtown Chicago. Mike Ditka, his bar down there. Some of you may have been to his bar there on Rush Street, and apparently that's where all the Bears have been hanging out. And he said the Bears are running down to the exchange. They're going to go ahead and start getting back to work out here. And that's what we're going to take a look at here in the markets. Right now, we've got the Dow up 122 points, trading at 15,031. S&P up 11 at 1614. NASDAQ up 25 points at 3401. Russell 2000. Up 7 points, trading at 971. NASDAQ 100 up, NDX up 29, up 20 points, trading at 2914. New York Stock Exchange up 70 points. Got good breadth in these market numbers here. Gold's up $2, silver up 18 pennies. Light sweet crude is up 51 cents. We'll take a look at that. Over in Europe here real quickly, let's go see how they're trading right now. Not a lot of movement, not a lot of change here. The DAX is up 49, the FTSE is up 82. Our call number is 877-927-6648. Just peek in again on the 120-minute chart here for the S&P futures. We saw it get up there and tag that high of 1612. 1612, let's see what it actually got up to. 1612 even Steven, 1612.50 would have been the exact point, 618 retracement. So price got up there. We've seen a little bit of air come out of the tires. On a 30-minute chart, we haven't really seen the bears completely show up. It's created a dark cloud cover candle. We'll take a look at that maybe a little bit later on. But what we can see here on this 120-minute chart, we can see that price now has made it back to the 618 level and is peaking right back down inside the descending price channel. You get a close back inside that price channel, guess what, folks? That means that price will then all of a sudden move all the way back down to the bottom of that price channel. So this price channel here has been working really well. We've seen some extremes to the downside, just completing expansion patterns. We saw one breakout. That was the failed breakout right here, and all that it did was a retracement. Let me go see what that retracement was. Let me get rid of a couple of lines out here on my screen because we can always put those back in here. And that retracement that it did coming off of the May 22nd high to the low that was put in, just a little bit over a 0.618 retracement. So these are areas, these are key areas for us to be paying attention to. Also from the standpoint, if you do get a breakout of this descending price channel, the price would travel up, in fact, to the 0.786 retracement, and that would be your next area to take a look at, potentially going short the market until the trend changes here. And the trend right now is still down. We can see relative strength-wise on the 120-minute chart up towards those areas where we also see some reversals. So there's some significant turbulence right here, right now, as the ES Mini has made that 0.618 retracement and is traveling right back inside that descending price channel. But we'll see how this day here is going to play out. Let's go take a look at the indexes, see what they are doing. We'll go to the indexes, then we'll take a look at the actual ETF structures as well. So we're going to start off, you know what we should start off with? Let's go start off with the Dow Jones Transportation Index. Yeah, because we don't really ever take a look at that, do we? So let's see if I've got that on my screen out here. I probably don't. So we're going to put it up here. Give me 1 minute. Boy. Why did the ticker symbol $TRAN, I believe it is. I had a little bit of a brain fart there. Sorry, that happens every now and then. And sometimes those are pretty stinky, too. But we're going to go ahead and take a look at the transports here right now, traveling out at 61.74. Now, as price moved down inside the transports here, it also, see if it completed an A to B equals CD down pattern. Let me pull this back here because it doesn't look like it actually completed it. But how could that possibly be? We're going to take a look at the A point of an A to B equals CD down, and that would be the high from May 20th out here in the transports. That came in at about 68.58. That was your A point. Your B point down here, looks like on June the 5th, June the 6th, we'll use June 6th, level that low, 61.15, and your C point was, so it completed a 1-to-1 A to B equals CD, just about even. Now, as it was doing that, the interesting thing here, I've got this candle over on the left-hand side. You may have said to yourself, hey, what is that candle? And why does Steve have a red line across the chart there? And that's because it was a hammer candle. So as we take a look at and this, so we can see where there's really strong support inside the transportation index. And so this is good, especially if you try to trade the transports out here. So you've got this hammer candle out here from the session of April the 5th out here. And I'm going to go ahead and I'll put a black line across it so I can find that button there. Now, the low of that hammer candle has not been tested. That low, 58.7812, it's something you're going to want to be paying attention to because once that low gets broken, that'll be some serious stuff inside the marketplace. But we can see here, we can clearly identify where there is support inside the transports. And it's been tested from the standpoint that price has moved down into the hammer candle, but the low of that hammer candle has not been tested. The transports here, actually, when you take a look at the Dow itself, are fairly strong inside the Dow. Something to think about. At least they were on that first A to B equals CD down. Now, let's go ahead and get rid of the A to B equals CD down marker, and let's go see what the transports here are doing. We're going to take a look at the two different retracement levels. We're going to come from the swing point high on May 21st all the way down to the low that was put in here on Monday. We can see right now the transports are just at the 0.382 retracement. We try to get a little bit there. We'll go with blue lines out here. That number is 61. Looks like about 61.87. You're trading at 61.80 right now. So it's made its dead cat bounce out there. And for something that was inside the Dow that had only made a 1-to-1 A to B equals CD down, where the actual Dow Jones Industrial Average, when we go take a look at that, we're going to see that made a larger A to B equals CD down. It's going to be important to be paying attention to this. So we were taking a look in the previous hour. We were taking a look at inside the S&P 500. We were looking at the financials from a strength standpoint to give us some information. We were looking at also the consumer staples area for information. And inside the Dow, what we're going to be paying attention to is actually the transports here, because it only made a 1-to-1 A to B equals CD down. And so far right now it's struggling, or it's just only been able to make the dead cat bounce, getting into that 61.80-ish level out here. The level that it should bounce to or could bounce to if there really is a breakout, if in fact the bulls actually take over the session today, and unless we get those bears really do a workout here, and I don't know how much drinking they were doing if they were on Rush Street here till 10 o'clock here this morning. We'll just have to see what kind of energy and power they can gather up here. If there is a breakout and the bulls are able to overrun the bears out here, you'd see the transports get up to 63.33, but it's going to have to prove itself because that descending price channel and getting back to the 618 retracement level on the ES Mini, that's some serious stuff out there, and that's normal, and it's what you would expect inside the marketplace. So this should be another wild day. I don't know how many days in June we've had 100-point swings, but we most certainly have had it here today. So that's on our trannies. Let's go now take a look, as long as we're in the Dow area, let's go take a look at the Dow Jones Industrial Average. So we're going to take a look at that. We'll pull that back up here, and it had made did it make more than a 1-to-1? Maybe I was full of hot air there. Let's see here. It only made a 1-to-1 A to B equals CD down. How about that? I thought the Dow had made a larger A to B equal. It was a doozy, though, that's for sure, point-wise, about 800 points or so. But it only made a 1-to-1 A to B equals C. But let's go take a look at the Dow versus the trannies now. Let me get rid of some of these lines here on my screen. And let's do the same thing. We're going to go from the high, from the May 22nd level, all the way down to the June low. And you can see that it is well above the 0.382 level. So you can see that the trannies are actually not the strength; they were actually weak inside the marketplace. So we'll just try to rewrite that tape that I just did earlier. I thought that the Dow had done larger than a 1-to-1 A to B equals CD down. Okay, so. Now, let's go take a look at the Dow. And what it's doing is traveling at a price level of 15,031. Inside the Dow today, I will give you this number here. Give me a moment to pull this up. Oh, I didn't mean to do that. I'm going to give you the number that you can write down on a pad of paper. And let's see right here. If the Dow today, in my opinion, closes above 15,009, it's trading at 15,032, you will have seen a fumble by the Bears. The Bears have had control since May 22nd out there, and we saw the Bulls actually lose the ball, and the Bears took over, and they've had control of the ball up through right here and now. So today, the key number actually to be watching for is 15,009. If it closes above 15, if it's 15,009, then it's still the Bears that have control of the ball. If it's above 15,009, then even though this has been a light volume bounce out here, it'll tell you that there was a fumble by the Bears. Inside the S&P 500, I'll give you this number. You want to write this down on a pad of paper, 1650. That's the number to be paying attention to in the S&P 500. A close above that, and it also says that the Bears have fumbled the ball. But as of this moment, they still have retained the ball, but we'll see. They're kind of teetering out here. And as we take a look at the Dow itself, is above the 0.382 retracement level. And the 0.618 is 15,163. Now, that is of the larger A to B equals CD down. Let's take a look and see if we've got any convergence here of retracement levels, and that's just simply by taking a look here at the C to D leg. So we'll go from the C point, June the 18th, all the way down to the June 24th level out here. We'll see if I can get some other colors, and you can see of that swing point level, what it has done, it's gotten to the 0.618 area, which is 15,000. Let's see, we're trading at 15,035, so it's really right now at 15,035, 038, somewhere right around there. So we'll see what kind of resistance we get inside the Dow. Let's go take a look. Well, we'll take a look at the S&P 500 when I get back. I guess a little bit too much babbling out there. 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 125 right now. S&P up 13, trading at 1616. And let's actually just switch over into the ETF structure. We'll take a look at the diamonds. Since we were looking at the Dow earlier, we can see here the diamonds trading out right now at a price level. Well, they've gotten up to a high so far today of 150.27. They're trading about 20 cents below that level, and that is at the 0.618 retracement of the C to D leg out here. Let's take a look at the volume, because what the diamonds are also doing is they're going against that gap down that was created on June the 20th. Now, the top, meaning the top of the trading session from June 20th, is 149.88. Volume there, 14 million shares. Yesterday on the move back up, 6.2 million shares. So they're taking on that gap here right now. Volume so far in the first hour of trading has been looks like 1.8 million shares out there. So 1.8 million shares. So the volume is not too shabby out here. But, of course, we know that that is always front-loaded. The diamonds, if they close above the 149.88 level, they will go ahead and complete the gap. They'll probably actually make a move up to about 151.81. The bottom of that gap there is 151.05. Let's take a look at the retracement off of the May 22nd high down to the low that was put in on Monday here, and the 0.618 level, very close to the 0.786 area of the C to D leg. So that would say your range here, if in fact you close inside the gap today, is going to be somewhere between 151.05 to about 151.60 or so out there. Could even, I guess, I would say that would be really the range that we would be looking at. Let's go out to Denver to Mike. Mike, thanks for calling. Thanks for holding.
Hello.
Hey, Mike, how you doing today?
Good. How you doing?
Excellent. Excellent. Thanks for calling. Thanks for holding. You wanted to tell us what you wanted to take a look at and how I can help you out.
I want to look at HBAN, Huntington Bank Shares Incorporated.
Okay.
Just trying to, looks like it's wanting to hit a little bit higher, but I know it's in a down or iffy market today. Just trying to think what might be a good entry level on that.
HBAN. Okay, so we're going to take a look at this. This is Huntington Bank here. Ticker symbol again, HBAN, folks, if you're following along here at home. So now you're looking for a good entry signal in order to go long, correct?
Correct.
All right. So let's take a look at it. It's trading up towards the top of its session here, just like the financials as we pull this back, though. You know, it most certainly is struggling. Let's put this on a weekly time frame first. Are you looking at this as a longer-term position? Tell me your time frame, because that will be helpful, too.
Well, just like a swing trade, anywhere up to, a couple weeks, maybe a month or something.
Okay. So what this is doing, just to give you an idea here, I'm going to draw. Are you watching this on Tiger TV by chance?
No, but I'm listening to you and looking at it on my computer.
Perfect. Okay. So one of the first things that I would have you do here is I'd put it on a weekly chart just to get an idea of where it is and what it's really running into. And what I would do, Mike, is I would go to the swing point out here on the weekly chart. I'm looking at January 2nd, 2009. And that high out there is about $8 even. And right now it's trading at $7.89. Let's see, the high so far this week has been $7.96. And that's the area that it's really trying to potentially break out above. Now, you can take that line if on your system you can move it up and down. You can see it's really in a resistance zone out here. But it needs to break above, really I'd say the real breakout of this would be above the October 9th, 2009 level. And that's at about price point of $8. Looks like $8 and a penny out, 8.26. So this thing won't break out to the upside until it gets to 8.26 out here. And that's on the weekly. I'm going to go put this on a monthly chart out here, see what kind of volume we've got behind this. So on the monthly chart, just to see if there maybe is a B point, a swing point. And that would be the what you'd be looking at here on the monthly would be February 28th, 2011. And that high was 770, and there were 358 million shares. And you traded above it here last week with only 192 million shares. So it doesn't really have the volume here to really say that it is a breakout. So what you're going to look at to try to buy this thing then most certainly is a retracement. So we know we're up against resistance. Now, if it does break above resistance, I think it was 826 or so that I gave you, then you come back and take a look at it as maybe, a momentum trade because it had been consolidating for so long. But let's say right now it's indicating it doesn't really have the volume to take it out on what looks like the monthly and the weekly. So now you're taking a look at, okay, on the daily, where is it that this thing can pull back into? So now on this equity, we want to try to find some signs of strength out here or some high volume bars. And where that is in this equity takes you all the way back to January 17th, 2013. Can you stay on hold through the break?
Sure.
Okay, so we get back. We're going to go take a look at Huntington Bank with Mike in Denver, Colorado. And what we're looking at right now is the breakout gap from January 17, 2013. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, Now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the Dow is up 156 right now. S&P is up 16. Russell 2000, leader in the clubhouse, up 10 points right now. We're going back out to Denver. We're taking a look at ticker symbol HBAN. And with Mike. Now, so Mike, I drew a couple of lines across my chart, and I know you're following along at home. So the most recent area, let's kind of step backwards from where we're at right now. And what I'm first looking for are some bullish candles. Where is it that the bulls have been truly defending their position out here? And the bullish candle, if we take a look at the most recent swing point, that was not a bullish candle, even though it was colored green. That was June 20th. And the volume there is 17 million shares. So it made a low recently with 17 million shares. Yesterday made a high with 12 million shares. That was going against 15. It says that, to me, it should at least revisit that low. So your first area, your first possible area to take a look at a trade is going to be, and there was a piercing candle here, which is bullish, which was on the trading session of June 6th out there, which had 8.9 million shares. But see how it came back into that swing point with more volume here on June 20th?
Yeah.
Says to me that it should at least come back and test that low. So I would just sit there and wait for at least a test of $7, and it looks like it's $7.38 out there. If it tests that on less than 17 million shares, that's a place where you could fire away at a trade, but I would want to see what the financial sector is doing. I'd want to see what the general market is doing at that time as well. That's the first area. Your better buy on this is going to be the tested area where it broke out, which takes you back to January 17th. You see that trading session there where it had 35 million shares to the upside?
Yes.
Okay.
That little gap?
Yep, that little gap. Now, the nice thing, I wouldn't be afraid of that gap because that gap actually is your friend out here. And what I mean by that is this equity pulled back on February 25th with 9.5 million shares going against that gap up with 35 million. And then on the following trading session where it created that little doji candle, 12 million shares going against 35 million. So there was not enough to bust it down. And then we had a further test, even though it didn't get all the way down there, it was close enough, with 15 million shares on April 18th. So it's having a real tough time busting through that area. And that's where your more ideal reward to risk would be inside this equity is coming back. And what I would use as the benchmark, you'd like to see it test that area, get down there on probably less than 12 million shares, which goes back to that little doji candle from February 26th out there. So right now, that's acting as a good area of support. And that's where you can have this gap be your friend. Now, for it to, if you got into the trade there, your stop is going to have to be underneath the January 16th area, which is, I would say it would have to be under 661 on the trade. So you're going to have to do your own, reward to risk calculation. Now, if it closes below the level of 675, which is that doji candle, so it would be inside the gap there. And then what you might want to take a look at is I go all the way back a little bit further on the left-hand side, and you have that high volume bar that sticks out. That's October 18th, and the low there looks like it's about 653. So that's an area that this should, and you can also see there was another gap there. This thing gapped up on January 2nd, which is where I think the market, in essence, is going to move back to. So that's another area where you could take a look at it. And I think I know that what you need to do is you really just need to take a look at volumes as they come back into this area. But you're looking at more of a swing trade as a longer-term trade, right?
Right, but it looks like it's going to take a month or so for it to get back down that way.
Don't know what the time frame is. I can't identify the time frames, but what I can say though is if you take a look at this, maybe it will take less time than you think because the swing point from May 30th has already been hit, and that had 15 million shares, and that's what was tested yesterday. And yesterday you had the volume up with only 12 million shares. So you have a rejection of a swing point on lighter volume and on price. And now it says that it really should at least run down to that June 20th level, pretty quick here. So it should run down to about 738 or so. So I think we'll see that test here quicker than later. And it's going to be that volume where you're going to get some type of indication. Now, whether or not you want to trade this as a trading range from 740 to $8 or not, I mean whether that fits your personality, or you just have to make that determination. But that's what I see. Is there something else that you're looking at in the chart here that that you were coming up with that might be different?
No, I was just kind of asking your advice on it, and kind of explained everything that I needed to know on it.
Okay.
And look forward to listening to you some more.
Hey, great. And thanks so much for listening. Have yourself a great Thursday.
Great. You too. Thank you.
All righty. That was Mike in Denver, and we were looking at Huntington Bank Shares, ticker symbol HBAN. Not a bad-looking stock chart out there. Of course, it looks so much like the financials. Again, if you put up that weekly chart out here, you can see really running into, a resistance area. That really established also by the candlesticks out here. You got the bearish engulfing on the weekly chart, taking all the way back into January of 2009. We can see that's an area where price is struggling. If we take a look at the trend on this though, the trend line, not the Trend is Your Friend, which is that special report that's available to you on the homepage of TFNN.com. So go check that out. If we just take a look at the trend line coming off of the lows back here in March of 2009, and we use as our next touch point, looks like maybe around the September 16th area of 2011, you can see how this also has been dancing the trend. So, Mike, you can go ahead and put this trend line on your weekly chart as well and watch to see what happens as it comes back and it tests this area. Where along that trend line, I'm not sure, but it looks like it'll test it, and we can see that it's held that area pretty well. It looks like maybe it's around the $7 and change range, but go ahead and line this up with your daily chart as well, and because what you don't want to see is you don't want to see a break now of that trend line out there. So that was on Huntington Bank shares. Let's go back in, and I want to check out that ES Mini chart. We're going to take a look at the 120-minute chart and see what the S&P is doing here. So how did that get erased? Did I go into the right spot? I did. I must have erased it. Let me come back and put in the 0.618 retracement level. We've got the ES Mini trade at 1613.75, which should be right at that point. So it's slightly above the 0.618 level, which is 16 and 1612 out there. But really getting into now on the 120-minute chart into that extreme overbought territory. And if we take a look at this level, and that's why you want to, you can use this as a really great, you can use this as a really great tool to identify when and where you ought to go ahead and take long positions, even short positions as well. But, if this is a real breakout, and I can see the right now at this stage here with the breadth of the market inside the New York Stock Exchange, let's go back and take a look at that here as soon as I can get over to that tab. I want to see what we've got going on here. And because the breadth of the move over the last 3 days has been pretty good. Now it's been working off a really oversold McClellan oscillator out there, but you do have advancing issues, leading declining issues by about 8 to 1 out there. So again, another good day from a market breadth standpoint. But it's if you take a look, and I've just pulled this 120-minute chart back pretty far to the left-hand side, you can see that anytime you get up into these extreme sold or overbought territories, you really have to become careful out here. Yeah, it absolutely does measure momentum to the upside, but it just says that be very, very careful. You don't need to chase anything. What you want to really be doing is you want to be buying when they are down towards the bottom of these levels out here, when they're down, at the 30 or below type range. And you want to make sure that you are following along with bears. Remember, drafting a car in front of you, or in this case here, drafting a candlestick is really the best way to be able to trade out here. So this is saying that we're going to see some kind of a pullback and a real breakout now. Just like we saw back here in the time frame at about 5:30 or so in the morning. That was really about 4:30 or so in the afternoon on June 17th was when the breakout came back and it tested the descending price channel out there. And that's what you want to see out here. You want to see it work off the overbought condition, come back, test that a few times, and then that gives you the breakaway into the clearance up to about the 1627 range inside the ES Mini out there. At least that's how I would be taking a look at it from a trading perspective. We haven't looked here at any of the commodities today, so I'm remiss for doing that. Let's at least go take a look at Goldilocks, silver, light sweet crude, natural gas. Right now, gold is trading up $1.90, so not a lot of spring in its steps out here. Of course, we can see that gold is truly in the oversold territory out here. Last time we got down here, which was back on about May 17th, what we saw was the market just simply move sideways to slightly up to work off that condition. It did that for quite a while before we got that big down thrust here on June the 20th. It is, what gold needs to do is work off this oversold condition out here, but does not look at all to me to be a buy, although it is dealing with the December 3rd, 2009 swing point. So that level, I'd have to go over to the GLD to see what kind of volume that we had there. But just simply know this, that gold is certainly oversold. But quite frankly, it has a higher relative strength than the last time that we were down here which was back in April of 2013 when it cracked that 1321.50 level. So gold is one of those things where I just kind of shaking my head. I think you just really need to wait for some sign of strength inside gold, the GLD, silver, before you do anything, because the move has been so significant to the downside that any retracement is going to be a pretty nice retracement there. So you don't need to get in front of that. Silver, it's really the same thing. Our target area here in silver, or so we believe it is going to be 1735, 1740 or so, which is the 0.786 off of the 2008 lows out there. But the bar, the way that it's coming in there, maybe that 786 Gartley, long-term Gartley buy pattern is going to fail. And if it fails, that signals a 100% move of a move all the way down to about $8.50. So that's what silver is, high-ho silver is looking like. Let's take a look at natural gas here this morning. And natural gas, how about that? Natural gas going ahead and now breaking today. I believe they were out with inventories earlier today. And natural gas is now breaking the rising price channel. Now, that's a significant event out here, so we'll watch this because this had created a nice little 0.618 Gartley buy pattern. That was actually completing here on the trading session of June 25th as price got down to the low of 364 out there. It was right around 361 that we were looking for. Yesterday you had a little piercing candle out there, so it was your first sign of bulls, but those bulls here absolutely got crushed. And right now we can also see that it's trading below the 200-period exponential moving average. So this buy pattern here looks to me like it is failing and potentially failing miserably out here, and that is on natural gas. So that could be changing trends here. We won't know until we see what happens when price tries to get back inside that rising price channel. So for natural gas, it's time to just simply sit on your hands. Light sweet crude out here. Light sweet crude, continues to tinker. This is the weekly chart out here. I'm going to go ahead and pull this back. You can see that descending price channel, and we can see that, broke out on the 14th, the week of the 14th, came back last week, got back inside, and this week it continues to try to break out of here. That's a longer-term descending price chart, and if this really does break to the upside, not only will we see another test of $98, but we could see a test all the way up into the $108 range out there. But it's all going to be about also what happens. Well, it won't all be about, but certainly we're going to have to be paying attention to what's going on with the king dollar. And right now it looks like the euro is starting to give back some of its just slight sideways move out there, and the king is getting a little bit of energy here. So maybe we'll see light sweet crude get back into the downtrend channel, and I suspect that's really what it wants to do out here. But light sweet crude has been a little bit perplexing. Let's take a look at the 30-year Treasury bond, see what it is doing here this morning. Really just a sideways move. Kind of interesting with the Dow being up 146 points and the S&P up 14. You would think that maybe bonds might pull back, but I think that what we can safely say is that correlation right now just ain't out there. And so I think you just trade, and as you always should, just trade each chart pattern separately and don't get too hooked up into all of the correlations in the marketplace. So if we go see what's going on around the world, let's check in on the world charts out here. Here's that beautiful hammer candle inside the Shanghai as it was making its butterfly pattern. In fact, let's go ahead and get rid of the Gartley pattern that had failed out here. Let's just go draw in the butterfly pattern. It's nice and colorful. We do this in Technicolor, and as it was making that pattern, the 1.272, or very close to the 1.272, it formed a hammer candle out here. That hammer candle formed on June 25th. Now, it has been just simply, hasn't had a lot of oomph behind it. And so we can take a look at these small-bodied candles out here. I wasn't so concerned about the candle session from the 26th out there because it really didn't do anything to change the integrity of this hammer here. Yesterday's trading session, you had an intraday high inside the Shanghai of 2072 out there. It actually closed, it looks like, about 2040 out there. And now, what I like to do is I like to blend things together here and blend candles. And so now a little bit concerning with this hammer candle is haven't been able to close above it. So you've had no follow through. The top of that trading session was 2054.94 from June 25th. So that hammer candle looks a little suspect, and maybe what we're going to really see here is a test of the low out there, because with that was a big bullish day. Take a look at that move here, where this had pushed all the way down into about the 1.272 expansion, and that was a low of 1935. 1935 to move all the way and close at 2050. That was a heck of a move. That was a real heck of a move. And yeah, maybe it took a little bit of energy, but quite frankly, it should have had follow through yesterday, should have had follow through the day before. So this is suspect. And says, really? I think that low is going to be tested, 1935. 877-927-6648. I'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi folks, I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 157 right now. S&P up 15. And moving in the market here, you got Google to the upside. They're the leader. Price line right behind them. Equinix, BlackRock, Precision Cast Parts. And then you start with the pharmaceuticals. Regeneron out here. Biogen. Let's go take a look at the IBB. That's the NASDAQ biotech ETF out here. And we can see that the B point of an A to B equals CD down. That was crossed. That's the June 5th level that we're taking a look at. Had volume of 2 million shares. And when that level was crossed, it was not doing it with conviction, only 1.4 million shares. It went ahead and completed close to the 1-to-1 A to B equals CD down with the general market here. And the biotechs have shown up. Well, they've been a real strong sector for sure. But lately we've been seeing them each day be in the up and down area here. Now what we're seeing this do is we're seeing the IBB yesterday went ahead and completed filling the gap out here, that gap from June 19th. Now that had 479,000 shares, and yesterday you were up into it with 976 out there. So said that it had some volume for sure as it was closed. I'm going to get rid of some of the lines on the chart. Let's just do that. Let me get rid of some of these lines, clean it up a bit so we can go take a look at this for sure out here and see what it is doing. So you can see right here the gap, and you can see how it was coming in. Again, that gap had 479 million shares versus 1,000 shares, I should say, versus 976,000. So now it's going to trade into, or should trade into, the swing point out here from June the 10th. And that level has 380,000 shares so far this morning. You're up with 225, so decent volume out there. Let's take a look at retracement levels here from the swing point high, which was on May 15th, all the way down to low put in here on Monday. You can see it's above the 0.382 level, so it looks like maybe it'll make its way up to about the 178 range out there, and that is on IBB. Let's go check in on Apple out here, see what Apple is doing. Really struggling this morning, only up 81 cents with a market here over the last couple of days that has moved big dollar-wise, and Apple has not joined in at all on this rally out here. So maybe that is spelling, even though this is a Gartley buy pattern out here, you have not gotten the bullish signal. A Gartley buy pattern from the standpoint it completed a 1 to 1.272 A to B equals CD down. That price projection right around the 387 mark. So far this morning it's gone down to a low of 395. Yesterday's low was 395 as well. Now over a 0.786 retracement level. We'll go ahead and draw that in. Now this is one of those patterns that would have shown up if you are a subscriber to the Art of the Charts, then what the Art of Timing the Trade charts out there, then you would have gotten this on your scan yesterday, this morning as well. And, so showing up is just a nice Gartley buy pattern. But you've got to still do the work yourself. And I say part of that work is making sure that the bulls show up. And we have not seen any bulls inside of Apple. In fact, if we take a look at Apple, what it's really doing right now, it's trading inside the swing point from April 19th. That is 21 million shares. You are in there with 13 million shares. So you're coming in with lighter volume. That says that what should happen inside Apple first is a test of 385.10. If it tests 385.10, closes back above that level on less than 21 million shares, you'd have a rejection of a swing point on lighter volume and price, and that would be short-term bullish out here. But we can also take a look at it like this. The volume of only 21 million shares, it should be able to take out that level. And if Apple does take out that area, well, then we're going to see that move all the way down to the 340-ish range. Folks, it is Terrific Tuesday, so stay tuned. We got Basil Chapman. He is up next. Following Basil, as we do each and every Thursday, it is going to be Larry Pesavento doing the Futures Hour. Then after Larry, we've got Daryl Martin, David White, Andy Heck, and Tom O'Brien. Don't forget, on your homepage at TFNN.com, your homepage is the link to attend this evening's workshop free of charge with David White and Tom O'Brien. Thanks so much. Have a great Thursday, folks. Look forward to seeing you in the morning.